afternoon, everyone, and happy Friday. Welcome to Stock Market Today. Ali Corman and Ed Carson with a breakdown of what went down in today's session and this week. So a lot of shifts happening this week to break down that day-by-day analysis as we like to do. And Ed will review three key stocks that are further evidence of what's going on beneath the surface.
Yeah, and it definitely shows you the importance of the M in CAN SLIM, that these moves in these stocks definitely reflect the moves in the market. And we're going to take a look at Microsoft, Nvidia, and Doximity.
Okay, and we will provide you that battle plan for the week ahead as well. And let's take a look at the NASDAQ composite here. So not a great finish on Friday. I'm pulling up my numbers here, down about 0.5%. The S&P 500 down 0.2%. The Dow roughly flat. The Russell 2000, the worst hit, down about 0.7%. We'll also talk about the weekly action. So not a bad week, but not a great finish to that weekend.
Yeah, not a good start, not a great finish. Sold off pretty hard on Monday. That wiped out Friday's rally attempt, at least on the NASDAQ and the S&P. Then we rallied. So Tuesday became day one, Wednesday, Thursday, Friday, day four. Tuesday and Wednesday and Thursday, that was a nice little rally, little mini rally in their rally attempt. And then you can see that we came up to the 21-day line, which has been a resistance area. It was a resistance the last time we came up. The last time we sort of rallied and everything was looking good, and then it hit right there. Backed off. Okay, that's not too bad. We're waiting for the jobs report. Jobs report had this and that. It was sort of like it was weak, and yet bond yield still rose. That's not a great mix. And NASDAQ basically closing at lows for the day. Not good action in that regard.
And the S&P 500, we'll look at the daily action as well, and getting turned away right around the 50-day line, closing right around the 21-day.
Yeah, and so it's pretty much the same kind of thing. It was looking pretty strong up until Thursday, backing off again. That was understandable. Friday, not so good. Now, this doesn't mean that we're doomed or anything. And we're like, You can see that we're below the 50-day line still on all the major indexes. You can see we're below these regression lines on the S&P 500. And then, as Chris Gessel has said, you can be below regression lines or sort of channel lines for several weeks. It doesn't mean that that channel is dead, but it is worrisome. And, we're living below the 50, fighting for the 21-day. It's just a situation where, the market hasn't followed through yet, and we don't know yet. And it's hard to do with yields rising. And it's just, we have to see that kind of power before we can start feeling more confident.
Yeah, and it seems like now a follow-through day would coincide with getting back above perhaps that 50-day line, if that's something that we might see next week. And just a reminder, we're looking for a 1% to 1.2% gain in one of the major indexes in this rally attempt that we now have. So it could be on the S&P 500, NASDAQ, or Dow. All three would be great to see, but not only do you want that strong gain, you want volume heavier than the session before. So we will be keeping an eye out on that. We want more signs that money, those institutional investors, are coming back into the market, and that would, like you said, make us feel a little bit more confident.
That's right. And I think that's probably because on Monday we were sort of getting oversold. And so it's not surprising to see a bounce for a couple of days. I mean, you see that a lot in, even in really bad markets. I mean, we were in a correction, but you'll have bounces. The question is, okay, you sort of get going, are the institutions going to pile in? And we just haven't seen that yet.
But we have seen a number of setups this week. But let's take a look at the action on the weekly for the NASDAQ composite. So I'm going to flip on back to that and change from a daily to a weekly here. So what does this tell us, Ed?
On this front, it's like, it closed in the upper half of the range. Look, if we go on and have a strong rally next week, we'll look back at this week and say, that wasn't so bad. We came off lows, it's like, it's sort of in context. It's just that we're around key levels. We're at inflection points. So, you don't want to get too negative and say, oh, we fell 0.5 percentage point. Yeah, but so it wasn't so bad. The week is okay. It just, we need more before you want to get really committed to this rally.
Yeah. And looking at this period here over the summer and through the end of August, that was a great time to be buying stocks and to be making money. And we want to be staying in step with the market because we don't want all of those gains to dissipate. We want to sidestep weak markets. Now, the last couple of weeks have presented us with head fakes, but for investors who have been following the rules instead of just letting losses get out of hand, we're waiting for those better conditions, those better money making conditions.
Exactly.
Okay, and now let's flip on over to the Dow on MarketSmith. Take a look at how blue chips finished the week. So as we were talking on Thursday, this is now yet another time that the Dow has come up to a 50-day line that's pretty horizontal and hit resistance there.
Yeah, I mean, what's disappointing now is the Dow is the leader. I mean, before it was hitting resistance and it was the laggard. Now it's sort of the leader in this situation. It has oil, it has some financials, and those are rising or at least holding up better. So if we did have a fall through day on the Dow, it wouldn't be the worst thing because it has more of the sectors that have been working, and you can't ignore that. A lot of the energy stocks are extended, and it's hard to buy, but that's clearly been doing very well.
Okay. And so before we move on to taking a look at some individual stocks, we also want to take a look at small caps, down about 0.8% on the day. So for the week, finishing lower, whereas the other major indexes finishing higher for the week. I mean, the Dow had, like you said, is the leader, had a strong week, up 1.3% for the week. So small caps looking lackluster here.
Yeah, I mean, maybe institutions are just going to favor the bigger cap names, especially those old economy names. I mean, it is sort of like higher lows and lower highs. So it's sort of getting sort of a V type of situation the last few months. And so something's going to happen at some point. That's not going to continue. Not that bad of a week, not a good week either. We'll just have to see.
Okay, and let's also check in on how growth stocks fared this week after really taking a beating last week, Ed, closing down the FFTY, that is, which tracks the IBD 50, closing down 8.7% this week, down, but down a lot less, down about 9.7%, finding support at the 40-week line. So leading growth stocks still not making meaningful strides.
That's right. You can't make some were doing well. There was a lot of stocks that did do well, but it wasn't like, oh, you could just throw in money, at the dartboard and growth would go up. It was a mixed bag at best, and that's after some weakness.
Mm-hmm. And the 10-year yield, as you're saying, that is a huge impact on the groups that we were seeing that are working, the overall conditions. So where do we stand now after a big week in the rise in the 10-year yield?
Yeah, that was a pretty big week. And now we're at 4-month highs. And really, earlier in when we came off, when back in the coronavirus lows, for a while, okay, the yield's rising. Of course, it was insanely low. And then somewhere around mid-February, there was that sort of spike just to the left over there. That was when or actually it was a little further. I'm sorry, it was when we gapped up. It was that week, the 216 week. That's when the NASDAQ peaked, and that's where we had trouble for a while because the yields kept on rising. So sometimes the markets will be fine with higher yields until they aren't. I mean, that's just the way it is. We're going to deal with the next few weeks. We're going to be wondering, is the Fed going to taper? And then there's going to be tapering. So there's going to be this situation. Yields could continue to rise. Maybe they will, maybe they won't. But that's just an obstacle. It's hard for stocks, especially for growth stocks, to do well in a rising rate environment. Maybe yields will come down, but you can't count on it.
Mm-hmm. And let's check in on how this is all impacting some names that we've been closely following, including Google parent Alphabet, finishing the week right at its 50-day line after losing that level in the prior week. Taking a look at a weekly chart, we can see an upside reversal for the stock, gaining about 2.4% for the week, some volume to the upside as well. And so finishing just below the 10-week line, but Google has just been a powerhouse since the coronavirus crash, really leading tech stocks higher.
Yeah, and it's looking fine. It's just above the 50-day line and just below the 10-week line. It's basically at a trend line. It's been a great leader all year long. in a better market, you would be saying, hey, this is right on the edge. You could have been buying it. I mean, maybe not, like, or right on the edge there, or just with a smidge more strength. But you don't know. Look, if we roll over again, if the market has trouble, it's going to fall too. We saw what it did up until Monday. It was falling. It was falling. It was not falling. It wasn't crashing, but it was going down. So if the market rolls over, well, that's going to happen almost certainly to Google as well.
Mm-hmm.
So it's definitely one, if we show any kind of strength, it's a terrible thing. We're right at that inflection point with the market, and you can see with these stocks, it could be a buy or it could be a short, almost at the same point, not exactly, but you could definitely see how that could be resistance at this area right now too.
Yeah, it looks like a nice little base, but I mean, 10% from high to low. If you're sitting in that, you're definitely feeling that. Google is a long-term leader. At least it has those characteristics of that strong earnings growth and earnings stability of 9. And with earnings stability, we want a lower the better. And for those long-term leaders, we like buying on these pullbacks to the 50-day line. So yeah, right on the edge there, Ed. We've talked about how stocks that we want to short are typically going to be in those prolonged downtrends or more established
Yeah.
downtrends with declining 50-day lines and hitting resistance at that level. But a key test, no doubt, for Google, and Nvidia is in a similar situation here, Ed.
Yeah, a little bit weaker, a little bit weaker. It's a little steeper. Maybe that's just the way the chart is showing it, but it feels a little steeper. And it hit resistance at the 50-day line. And it's below that. So even if this were a good market, you'd want that to get at least above the 50-day line, even as an early entry. I believe this is just a little bit below more than 15% deep of a base. So that's why it won't have a flat base after this week, but in another week, it would probably have a consolidation. Look, it could still do well. It's trying to find support around the top of its old base, the 50-day line. If we have a better market, this definitely could go on another run. But this is what can happen. You can't just expect a stock to rise on its own.
Mm-hmm. So we could see it work in tandem. If Nvidia and Google can start moving higher, maybe that also means that market conditions are
Yeah,
improving in a
it's cause or
substantial
an
way.
effect. I mean, they'll definitely move
Yeah.
it. Could we also look at Microsoft? Because that's actually the one I mentioned, because
Yes.
Microsoft and Google are almost interchangeable in many ways. They're
Yeah.
both long-term leaders. They're both on IBD leaderboard. They're both right on their 50-day line. I'm not sure if it closed above or below. It's probably above the 50 and below the 10-week, just like Google. And it has that
Probably.
trend line.
Yeah.
So there's a lot to like about it. But it's pretty much the same situation as Google in just want to see that strength in the market before you would make a commitment to this.
Mm-hmm. And even though we did see Microsoft up 2% this week, Google up 2.4% this week, we saw some breakdowns as well. So Doximity, which has seen a big move after its IPO breakout. I'm also going to change the price scale there. There we go. Our eyes can adjust better now. A big downside reversal for Doximity this week, putting the stock 7.5% below the 10-week line after closing just more than 2% below the 10-week line last week.
Yeah, this was pretty ugly. It looks consistent and steady almost on a weekly, but it was not on a daily.
No.
That was okay. Totally get it. I used to own this and I sold it, last week. And
It's
I was looking at,
validating, isn't it, Ed?
yeah,
Seeing stock
yeah.
close
It's
lows
like, but
this week.
we all have those little moral victories on a thing. And then, but it rebounded nicely. And I was like, oh boy, should I buy this again? Or should I was like, oh no, I'm watching it. And it comes up Wednesday and Thursday, it was starting to get a little extended, but it was acting really well. And I think it started to pare back even before the market did, but clearly the market comes back and that just the air came out of this, and just went right back down. And this can happen. I mean, this is part of it. When you're at this kind of inflection point with the market and a stock, you can see that reversal pretty quick. I mean, this is a recent IPO. Some IPOs have held up well, but sometimes they do this.
Mm-hmm. And in real time, like you said, this was looking promising. We were seeing a lot of software names on the move this week after pullbacks, but you can't take one day in isolation, especially in IPO stock, especially when we're still in a correction. You don't want to be putting all your chips in the middle of the table.
That's not a good time. Not when you have a pair of twos or something like that.
Yeah. All right. So, Ed, given everything that we discussed, what should investors be doing to prepare for the week ahead? We definitely made some steps in the right direction this week, but we're not out of the woods yet. It seems like a great time to get those watch lists shaped up.
Yeah, there's a lot of stocks that are sort of on the bubble or actionable or just below. So you want to get on get on that and sort of try to hone your list of what you want to, maybe really want to be interested in. But, it's probably just not a good time to buy right now. It's just, we got to balance. If you bought early, like, okay, if you sort of cheated and bought on Tuesday or Wednesday, or even on Thursday, if you're up a little bit or you're flat, that's fine. But right now, I think you really need to see it prove itself. It's if it really get a strong bounce, then a lot of these things you're gonna see a lot of stocks be buyable. But if you try to buy now, you could easily sell off in the next few days and come up with big losses. And they may not all just fall like with the market. They may fall more like Doximity, and you have like a 2-3% drop in the Nasdaq, and they could be down 15%. So the risk reward is not particularly good. It may be great in a day or two, but not right now.
Yeah, and we always talk about how being selective is important, staying in step with the market is important. But I really thought that Matt Caruso on IBD Live today was making some really great points about quality stocks that were setting up, but really just having that discipline and that patience to wait for the right time.
Yeah, discipline is really important. And talk about it's like you don't want to buy, you wait for that fruit to ripen a little bit. I mentioned that earlier in the week, but it's
Yes.
just like wait for that fruit to ripen, and that's when you take a bite. And right now, there's just too many things that are not quite there, and it could turn either way.
Yes, got to wait for that to ripen. I like that, Ed. All right, everyone. Thank you so much for watching, and we will be back with more next week. So make sure you tune into IBD Live in the morning, 10 minutes before the opening bell, investors.com/IBD Live. We look forward to seeing you there and right back here after the close. Have a great weekend.